ECB's failure to deliver any anticipated policy action yesterday disappointed the markets miserably. But what about the euro and other G10 currencies going forward? Well, joining me now to discuss the FX market is Valetin Marinov, Head of European G10 FX Strategy at Citi. Valetin, thank you very much for joining me. Welcome back to DukascopyTV. Now, first off, let's start with the euro-dollar. Many market players think the euro's downtrend is likely to continue. Do you agree? And if that is the case, what are the main downside risks for the euro?
We expect euro to remain weak across the board over the next 6 to 12 months, keeping the current downtrend very much in place. We assume that there will be a Greek exit from the eurozone. We expect a very volatile and widening peripheral spreads to Germany. We also expect the EMU growth to weaken from here, which will necessitate further action from the ECB, lower rates, bond purchases, but also more bouts of LTRO. All that is likely to make the euro increasingly attractive funding currency, and importantly should underscore the downtrend in the euro-dollar. In the very near term, we could see some consolidation in euro-dollar, given the sharp moves we've seen of late. Part of that, we think, may have to do with potential shift in investor focus to dollar negatives related to a potential resumption of the Fed quantitative easing program as soon as September. In this regard, any expectations going in that direction could be dollar negative and could allow some consolidation in euro-dollar.
As we've just discussed, the euro continues to underperform against most major currencies. Now, with the UK sterling also being one of them, how are your forecasts shaping up for this pair going forward?
We expect euro sterling to remain under mild downside pressure. We expect euro sterling to remain close to 78 in 3 months, but reach 77 or lower over 6 to 12 months. In addition to the exposure to the eurozone, we also highlight and see as important sterling negatives the fact that the UK economy will continue to underperform, forcing the Bank of England to implement more accommodative policies, potentially cutting rates one more time to 25 basis points. We also feel that the deteriorating economic outlook could increase the risk of a potential ratings downgrade in coming months, which could reduce the safe haven attractiveness of sterling.
In that case, what about the US dollar versus the British pound then?
We are projecting the downtrend in sterling dollar to continue over the next 6 to 12 months. We expect sterling dollar to reach 150 over that period.
Finally, Valetin, despite coming under occasional pressure since the cap was put in place, the Euro-Swiss franc floor is still firmly in place at 120. This week, the S&B revealed they were holding a significant amount of euro reserves. Now, looking forward, even on the 12-month horizon and potential S&B intervention, do you still expect the floor to remain intact at 120? Also, how does this fall in line with your forecast for the dollar-Swiss franc?
We expect, at least for now, that the peg will remain in place. The S&B has all the incentives to keep the peg in place. We cannot exclude quite a substantial increase in the downside pressure on Euro-Swiss, especially in the event of potential Greek exit from the Eurozone. We still suspect, however, that the S&B has some bullets left, in a sense that they could still implement capital controls to really enhance the defense of the peg, and they can certainly continue to increase the amount of their FX reserves. This all assumes, of course, that under the scenario of a potential Greek exit, there will be measures or indeed policies in place in the Eurozone that will prevent escalation of contagion from Greece to other weak peripheral states. So really that while an exit will start with Greece, it will also end with Greece, so that the Eurozone will continue to exist after a Greek exit. From that point of view, I suspect that indeed the SNB, with its policies in place and potentially adding additional policies, will be able to keep the peg for now. In terms of implications for dollar Swiss, obviously given our negative view on euro-dollar, especially over 6 to 12 months, this implies considerable upside for dollar Swiss over the same period. Dollars could appreciate against the Swiss franc to 1.04 over 6 to 12 months.
Valetin, thank you very much for sharing some of your latest FX forecasts. Now, we've got plenty coming up today on DukascopyTV to keep you updated and informed, including the latest edition of the Press Review, a closer look at some of the commodities, and of course a look at the week ahead for financial markets. But for the moment, goodbye.